Hey, it's Mike Watson with Keller Williams here in Palmdale with your monthly real estate update. October was a good month. You'll see that here in a second. We had 701 new homes come on the market, which was 8.6% less than we had in September, but it was almost 6% more than October of last year. The number of homes to go into escrow for October was good, 604. That's 7.25% increase versus September. September felt very slow, and we can see here that we had way more homes go into escrow. You'll see in a second that we also had a lot fewer homes close, but that's month over month. So year over year, we also had almost an 11% increase in the number of homes to go into escrow. That's huge. The number of listings to sell is under 500. That was 6% fewer than September. Again, we had over 7% or about 7% go into escrow, more this month than last month. 6% fewer closed. We had 11.5% fewer close in October of this year than we did last year. And so that must just be the number of homes that went into escrow, September of last year and closed in October of last year. The summer months last year did feel like they built up pretty well, and September this year again felt pretty darn slow. Not a lot of hard fact stuff that we can point to as indicators as to why that happened. Interest rates are on the rise. They're the highest they've been in 6 months and the second highest they've been in 17 months. But we just saw that we had more homes go into escrow this month than the previous month and previous year. So can't really point to a hard line fact on that. It is what it is. The average sales price dipped a little bit, 1.25%. We're still over 450,000. This is probably the most interesting thing to me. Our pricing has just about plateaued. We've been between 455, 460 since April, 6 months. Like we've been within 1%, variance month over month since April. I can't really think of another time that we had that long of a stretch where prices just remain the same. Anyway, 1.25% decrease month over month. Still a 13.7% increase year over year. That's substantial. I mean, double digits. And we were at 20+% for most of this year versus year over year. But we can see that last year prices, started picking up a lot faster. And so the appreciation year over year is less. Days on market is increasing. This could just be because it's going into the fourth quarter and maybe it'll slow down. I don't think so. It's probably more direct, related to the number of homes that we have on the market. And, there's a lot of uncertainty with the job market right now, and people deciding what they're going to do. So, but still 20 days, 21 days on market is fabulous. It's still almost 26% less than it was this time last year. And going into COVID, so the beginning of 20, we were at like 50 days. So we are way, way low still. 21 days is fast. And that 21 days is for all homes in all locations of our valley and all price ranges. So it's, a lot of homes are averaging much faster, like 7 days on market. But the average for everything is just under 21. The month's worth of inventory, again, months of inventory is current number of homes for sale divided by the average number of homes to sell over the last 12 months, right? So just 1 3/4 months of inventory, slight increase month over month, substantial increase year over year. And, we're at around 800 homes right now, which is the highest we've been in a long time. 18 months, it's the highest inventory level that we've had. So again, it's still a great market. 1.78 months is low. A balanced market is going to be 6 months worth of inventory. Anything less than 6 months is considered a seller's market, and anything greater than 6 months is a buyer's market. 1.78 is well below the 6, making it a seller's market. It's also, well above the, we were at 0.99 for a lot of this year. So it's almost doubled, but it's still a very strong market and the inventory levels are healthy. So I think that's all we have for you today. If you have any questions, feel free to reach out, let me know, and I will talk to you soon. Bye.